Now you should be able to see my screen. So I'm using William Shakespeare here, and we don't have to worry too much about his family. But what I'm going to show you is how to deal with assets. So the first thing to know is that every client starts with general personal effects. We assume that everybody's going to have some kind of content, and rather than making you put that in, we can have it pre-populated. And that's really to cover anything that's not specifically given away, any personal effects that are not specifically given away. So we're going to start with general personal effects, but maybe the client down the road, and we're going to concentrate right now on personal effects, maybe the client down the road wants to leave a piece of jewelry or their jewelry generally to someone else. Well, then we can always add that specific item of personality as another asset, knowing that everything else is going to be covered by general personal effects. So for me, I don't put in any specific personal effects unless I need them, because they're all going to get covered by general personal effects unless we need to carve certain items out. So that's the first item that's going to always appear for your clients. Now, when we want to add an asset, we've got 4 categories, right? We've got financial, miscellaneous, personal effects, and real estate. Every different kind of asset has a different checklist, a different set of inputs and information that we're going to collect about an asset. So let's start with a couple of easy ones. The first one is a bank account. So we're going to add the bank account, and you can put in as much information as you like or as little, but I'm going to concentrate on the key ones here. So if I'm just adding a general bank account, I might care about what financial institution. I might want to put in an account number. I generally don't put that stuff in. I might put the financial institution in here, just so I have a record of it, for example. The balance, okay, that's the current value or whatever. You can put values in. You don't have to. It's up to you. But if there's something nominal, maybe I'd put in $5,000. The idea is that eState's going to automatically calculate probate tax based on the value of those assets in the jurisdiction where the client lives. So William Shakespeare is an Ontario resident, so it's going to calculate probate tax based on Ontario law. You can flag if it's a foreign asset, which might require further planning. It's just a checkbox there. The income tax I will talk about separately, because that is a manual calculation. There's nothing in eState that's calculating the income tax. The reason being, we rarely have enough information to even to allow anything but an estimate. And so we just don't even bother. We do that manually. And I'll show you how to do that. And the last component of an asset, every asset, is the ownership. And there's really 4 kinds. There's sole ownership. That means William owns it by himself. There's joint ownership, which means that it's joint tenants, and you've got to add another owner to be the other joint tenant. So you can pick it from the list, and that's how we would do that. And I'll show you a better example of that in a moment. If it's owned partially, that's like tenants in common. So you can show that someone else owns a percentage. You can change the percentages, so it's 1% and 99%, whatever. You just have to add another owner. And by definition, it's going to fill in the amount that's remaining, but you can change that. It can't be more than 100%, obviously. So I just point that out. And the last way of owning property, excuse me, is this trust. Oops, sorry, I've got my picture in front of me. This trust, and that's really a bare trust ownership kind of situation. And the reason we would put that in some description is if we're doing secondary wills, it would exclude that asset from the primary will for the purposes of probate tax calculation. So those are the ownerships. One of the key things, if you mark something as joint, and I'm just actually going to go to a client that has more than just themselves. Let's try this, Mark and Sandy Smith. So we're acting for both spouses. So whenever we have an asset, it's going to be automatically listed If it's sole, it's going to only be on the owner's side. But if we had, for example, some real estate that was co-owned, so let's pick out some real estate, let's say the home. If we had that as co-owned, so either joint or partially with the other client, the spouse, Sandy, then what that's going to do is put it on both sides. So you can see here, home, it's joint with Sandy on Mark's side, and then on Sandy's side, you can see it as home joint with Mark. So it's going to do that. Same with partial ownership. So if you wanted an asset to exist for both the client and their spouse, even though maybe it was only solely owned, you could show it as partially owned, and then it would put it on both, for example. So similarly, if I put in the wrong asset, let's say, as an example, I have these private company shares, and it's called Corp 1. This is the Corp 1 shares. So I'm just going to put that in the asset name, because whatever's in the asset name is going to show up on the scenario, the list of assets in the green, as well as what's going to populate in the template. It's going to use the asset name. So here we have these shares and they're solely owned by Sandy, but then you talk to the client, you realize, oh, no, they're in the wrong spot. They're not solely owned by Sandy, they're solely owned by Mark. Well, here's a little tip. What you can do to get them over to Mark solely is make them joint with Mark. Now they'll appear in both. Okay, so I'm going to go over to Mark. Now you can see that Corp 1 shares, and now I can go there. I'm in Mark's and I can make it sole. And now it's going to be only in Mark's list of assets. So that's how if I ever have a mistake made where an asset belongs to someone else, that's how I can get around that. You make it joint and then with the other person, and then you make it sole with them, and that will remove it from the other person's asset list. So going back to adding some assets, I want to go to tax implications. So let's say we're going to add an RSP. We might put in the rest of this information. Just so you know, right now, beneficiary, even if you put in the name of the beneficiary here, it's really just for record keeping. It doesn't populate in the portal because there may be a change of the beneficiary designation. So in the planning, so we don't automatically do it. Although I know a number of people have asked for it, so we may actually build that in at some point. But right now, it's just for record keeping. So let's say that this person had a $250,000 RSP. It's going to calculate the probate tax automatically. Don't worry about the fact that, oh, there's going to be a designation of beneficiary, and so that probate tax is going to go away. You don't have to worry about that. eState's going to do that automatically when it sees that there's a proper beneficiary designation. So it's always going to have probate tax for every asset, even if it's going to, because we don't know right now what the circumstances are. All of the beneficiaries that you designate might have died, so there would be probate tax because it would pass into the estate. So don't worry about the fact that it shows up here in this list. It's the income tax that is a manual calculation. So how do we do that? Well, the same way we do it right now, which is a ballpark figure. So for registered assets like RSPs, 100% of that is going to come into income in the year of death. And that's going to be taxed probably at about 50%. And so roughly what I do is I always just put in, what's 50% of your RSP? And I'm going to ballpark that as income tax. Again, don't worry about the fact that, oh, but it's going to pass to a spouse. Well, it might pass to a spouse, and therefore there's no income tax. But the spouse might not be alive, in which case there is going to be income tax. So that eState's going to do all of that when you do your planning. You don't have to worry about changing that in the asset itself. Okay, always put in the maximum amount of income tax, assuming no rollovers. Same for probate tax. Just leave the probate tax there, because it's going to figure out whether there is probate tax based on whether there's a designation of beneficiary. So that's how we add those kinds of assets. And that's how we add tax here. So let's talk about another asset that might go up in value. For example, let's just say there's an investment portfolio. Okay, let's go to investment portfolio. So I don't need, again, you can do as much detail as you like. If the client has 5 bank accounts, I might not put in 5 bank accounts in my assets. I might just put in bank accounts. The only reason we really need separate assets is if we're dealing with assets differently in the distribution. So they're not falling into the residue. That's why we need it certainly for eState purposes. So if everything's just going through the residue and you're not giving anything specific, then technically eState doesn't need to have itemized assets. You might want to keep them for other reasons, like doing your due diligence and all of those things, but eState doesn't need them. So here we have an investment portfolio of 500 grand. There is no way we're going to know what the income tax is unless we know what the cost base is, unless we know a whole bunch of things. And rarely do clients know that. And so, I might just pencil in something to say, listen, are you investing in equities? Yes. Okay. I'm just going to pencil in, some amount, 20 grand for income tax. And how do I come to 20 grand? Well, I say, okay, let's, it's really just a placeholder because it depends on how much growth there's been from the date they bought it to the day they died. And again, it's just for illustration purposes to show that there is some income tax here. If you want to get more granular, then have them speak to their investment advisor and find out what the income tax might be if they passed away tomorrow. But I just put in some number to represent that. So that's the point there. And I know it's not perfect, but it does give them some idea of income tax implications. And you can do that for any of the assets. You can ballpark it and give them some indication. Don't forget, on the summaries that display this information, it does indicate that these are not accurate calculations. They're for illustration purposes only, and all of those things. So that's what we've got for those kinds of assets. So that's how we add assets. Again, personal effects. I might not even do any of these assets, add any other assets until I know that I need them. So for example, let's say I just left my general personal effects in there and I started to plan, and the client says, I drag my general personal effects assets in there, and I'm leaving it to somebody, children or whatever. And then they say, oh, you know what, but I want to leave my stamp collection to so-and-so. Okay, well then all I need to do is I go back into the asset tab, I add a new asset, personal effects. I go to specific, this is what I typically do. I click on specific personal effects and I select that. Up this comes, and I change the name of this to be stamp collection, or however I want it to show up in the template. So it's going to say my stamp collection, but you can capitalize, however you want it to appear in the template, you put it in here in the asset name. Okay, that's what's going to get printed in the template. And that's all I need to do. Now I've got it as an asset, and I can go back to that scenario and give that stamp collection away however I like. Okay. Maybe to the spouse. Okay. And that's why you don't necessarily need all the assets at the top. You can always add them at a later date, and they're relevant when you need to deal with them specifically. If the stamp, whether they have a stamp collection or not, if they're not giving it specifically to someone different than the rest of their personal effects, I don't need that asset. Okay, I don't need that asset because it's going to be covered by my definition of general personal effects. Okay. So that's the idea there. I want to talk about corporate assets for a second. So here's an example of private company shares. Okay. So two important issues here. The first is the asset name, and the second is the corporation name. The asset name, if I'm leaving a legacy of this, if I'm leaving a bequest of the shares of a private company, then I want to change the asset name to be however I want it to appear in the will. Might be my, so I'll get to that in a second, actually. Let me just do something else. So that's the asset name is what's going to appear in the template. The corporation name, if you're doing multiple wills, that's where it's going to list all of the assets under the definition of corporate assets. Whatever I put in here as the corporate name, that's what's going to appear in the corporate, in the list of corporate assets. And so it's important that this be the full legal name. that is what's going to appear in the list of corporate assets. However, if I'm giving this specific share, this away, I might want to call it my Sesame Street share, my Sesame Street Inc. interest, for example. And if I'm going to give that away in these scenarios, that's what's going to print. So it's going to print my Sesame Street Inc. Interest when I'm giving that to the spouse, for example. Okay. So those are the two. That's the distinction with private company shares. We have the corporate name, and then whatever you want. And again, you don't need to worry too much about this asset name unless you're giving a specific gift of those shares, for example. Okay. And it also, there's a mark for shareholders agreement, and it would remind you of certain things about that as well if you check that off. So that's really how we deal with assets. Sometimes, again, joint assets are going to automatically, anything that's joint, if you use the auto-assign joint assets, it's going to assume that those are joint with right of survivorship and show that as part of the assets that are going directly to the other joint owner. That's how eState does that automatically. So if you mark it as joint versus partial interest would not do that. Okay, because partial interest is, you can deal with it in your will. So those are really my comments on assets. Let me think if there's anything else that you might want to know about. So we've talked about how to deal with income tax and specific assets. There's always an other category. So either other registered, other investments, other financial, and then you can rename it. You can always rename it. Miscellaneous covers things like loyalty points and pets and things like that. Personal effects we've talked about, and then real estate. So you can, again, change the name, the asset name, and that's how it's going to print in the will. Why did I use interest? I just, when I refer to, if I'm giving a specific asset away, I often want it to cover not only the shares, but the shareholder loans of that company, any shares that's converted into to another subsequent company, amalgamation, et cetera. I usually call it my name of corporation interest. So that's why I do it. So I can probably show that to you if I don't know if I gave it away. Did I give it away? Let's just see. Yep. Okay. Well, let me just demonstrate that, and we'll get that generating in a second. I'm answering some other questions. So that's why that's what I like to use as far as the name, but you can change it to any name you like. And that's the same for any asset. If you want it referred to as something different, you can do that. Let me just call it up here on my screen and I'll demonstrate that. I will talk about gifts, asset gifts, Carolyn, in a second, which will be actually a whole different topic, but I will hit on that. So let me just show you here. So what it's doing, remember, as I told you, it was going to pull the full name, corporation name in this list of assets. Now, why are there all these ones? What eState does automatically is it looks at both the spouse and the client and put all of the corporate shares, whether they're only owned by the client or only owned by the spouse client. The reason we do that is it's likely that, first of all, if they don't end up owning it, it's irrelevant. If they do end up owning it because, for example, they inherit it from their spouse, we want it covered by their secondary will as well. And so by default, that's what we do. It's going to pull the the corporate names for shares owned by either of the two clients. And in most cases, that's what you'd want. If there's ever a situation where, again, it doesn't mean you're giving them the shares. It just means if they end up owning it at the time of their death, the secondary will is going to cover it. So that's why we do that. So that's the corporation name. But then you'll see, so I've got this. I guess typically I wouldn't put in but I just call this is the name that we put in, and that's what's going to appear in the text of the gift. Okay. depending on how you like it named. Again, I like my Sesame Street interest. That's what I prefer than the. But again, you can edit this manually if you like, and then you're fine. I'll show you why I do it. My corporate name interest. Let me just go to that section here. So whenever eState sees that you're giving a specific interest, a specific bequest of shares, it suggests that you use my name of corporation interest for those shares, the gift of those shares. So that's why I prefer my corporation interest. And again, you can amend this any way you want, but that's how we deal with that. So let me just show, anytime you make a gift of property or any asset, and we'll do a whole session on asset gifts, but if I want the recipient to be responsible for capital gains, that's a condition to the gift, right? So the condition is that they pay the income tax. Well, I click on that, and now eState will draft it so that they get it subject to a condition precedent that they pay the income tax with respect to that asset. So that's how you do it. It's under conditions and add, and then you can pick your condition. So that's that, but we will definitely do one on asset gifts. So that's assets. Are there any questions that people have about how that works and whether you need to add them or you don't need to add them, etc.? Please feel free to post them, post any questions. I also wanted to show you a couple of things. We've made notes now sync between the client and the client spouse automatically. So if I add note 1 here to Mark Smith, and then when I go to Sandy Smith and go to her notes, that note 1 is there too. So I was always finding I was only putting it in one and it wasn't in the other. So now it does that automatically. The other new feature that I'd like to show you is, let's see if this will work. Probably not without it being in any. So we've added the ability for clients in their questionnaire to add instructions or comments or whatever else. So as they're filling in the questionnaire, let's just do this. The last item is this notes thing where the client can type anything in here and it will automatically appear in your portal under notes for that client and their spouse. So if they say, you know, I want to leave everything to, you know, to my spouse and then to my kids, or whatever they want to put in here, it's just going to be a note. And when they save it, it will automatically be in my portal for that client. So I can have a heads up on what they wanted to do. And I can't for the life of me know which one. I think it was this guy. Yeah. So it will automatically appear in my notes. So that's a way. I know that a bunch of people wanted the client to be able to give them instructions or, you know, their thoughts or whatever. So now we have that available, and automatically it'll be in the questionnaires now for any questionnaires that go out. So I wanted to update you guys on that as well. Any questions about assets? Well, we've got you. Feel free to. And I don't know if you know now, everybody should know by now that we have customizable options for powers of attorney, and you can put in your own clauses. We added some new clauses like wanting to live at home for personal care and making beneficiary designations for financial. So those are now options available that you can use ours or you can use your own, fully customizable in that sense. So anything else while I'm here? You can unmute if you have a question. Nope. All right. Well, I'll hang around for a couple of minutes and thank you all. Oh, yep.
Jordy, just on this, the RIF designations, what does the language that eState use to make sure the tax is paid, and what do you think about the enforceability of it?
So it would be, let me just see if I've got an example of, if we do one in here where we made it conditional. I don't know if I did it after. I think I did after. Let me just regenerate it here. Let me get out of this.
Because this is always a spicy issue, right? But
Yeah.
it can be a big number.
For sure. So let me go back. Who was
yeah.
we working on? I think we were working on this one. And we were working on Mark. And we had, let's go descendant. Let's just do it right now. So we're going to leave the home to Sandy, but we're going to have them pay the income tax. So eState will automatically draft that, and it makes it a condition precedent. And so I'll show that to you in a moment. And we will do maybe next week, we will do asset gifts and how to do those. And because there are, I mean, I'm not a big fan of asset gifts. Whenever you can avoid them, because the problem with them is, let's just see if it generated. Give me a second here. Probably my download folder. This is what happens when you do live demos, right? Thanks, Ian, for this.
Sorry. Thanks for putting you on the spot like this.
I think this is it. Hang on. Yep, there it is. So down here. So this is the transfer of the house is made conditional. And so there's Sandy shall pay or make arrangements satisfactory to my trustees acting reasonably for the payment of the following liabilities: any income tax for which my estate is liable, et cetera. So that's what eState would generate based on that condition precedent. So,
so no, that's excellent. Actually, I just wanted to see the clause.
We can do this next week. We can get into this in a little more detail about gifts, sure. Asset gifts. So, Michaela, make a note. That's what we're going to do next week about asset gifts. And you know, and I will reiterate this next week. But if you can avoid asset gifts, avoid them, and use cash instead. But we'll talk about when the client insists on it after we've given them the suggestions and evaluated their need for it. So for sure. So
okay. Well, thanks, Jordy.
Thank you. Thanks, everybody. Hope to see you guys on Thursday. Ian's going to lead that discussion. And so he and Susanna will be on that. And then we'll see you again next week, I hope, for our asset gifts webinar. Thanks. Have a great week, guys. Jordy.